Welcome to the NGEN Markets training session. As others are joining in, we will start with our topics. So topic for today is custom benchmarking and how we can, generate custom benchmark and use it on, mutual fund portfolios. Then we will also try to make custom benchmarking as a custom security and try to compare them with each other. And then we will have a look towards questions and answers. So any questions you have, we will definitely try to address them. You can either write it on chat, or you can either ask us verbally. So let's get ahead. I will show my terminal screen. Just a moment. So I hope it is visible to everyone. And so as you can see, you can, if you want to onload a custom benchmark, there are a couple of ways to do that. One is via funds and other is through a portfolio. So today, for today's topic, we will talk about portfolios itself. So I hope I am audible to everyone and my screen is visible. If not, please let me know so that I can, try to fix it. So here you can see that to load a portfolio, there are a couple of ways. As you know, that we can add a portfolio from here and you can upload the portfolio of a client. Once you have uploaded it, you can have portfolios here itself. Now here, you can actually run a portfolio and actually do the custom benchmarking. To select a benchmark for any such portfolio, in the right portion, we have given this change benchmark, which is all dynamic. You can change any benchmark you want, either a pre-selected one like Nifty 50 or a TRI, or even, a foreign index like Dow and Jones or NASDAQ or FTSE, right? Now for a custom benchmark, all you have to do is click on this custom button. Once you do this custom button, you will see certain benchmarks which are already there. So now these are the benchmark which were already created by me. So if you haven't created any benchmark before, it will be completely blank. And now you have to click here to add and manage custom indices. So this is the portion where you will be added, adding the custom index. Once you click on it, just like this, you will see that there is a dialog box which opens up and which will show you certain ways where you can add custom index. Now let's try to make a custom index and add it into this particular list. So to do that, all you have to do is select an index. Let's say we are taking into consideration Nifty 50, add the index. You can take another, certain set of, let's say Nifty IT, Infotech, add it, and possibly one of them from, world equity market. So let's say we take into consideration S&P 500. Right now, this is a different custom index. You can make a weightages on them. You can give them weightages like 50%, 20%, and here you can give it 30%. So here you can see the 100% allocation being allocated to these three indices, and then you can save a name. So to save a name, you should avoid having special characters like and percentage, which will be very, very, tough for the custom index to be, added into the system. What you have to do is just name it in such a way so that you can actually make a proper custom index. So, what I have done is, like, let's say you want to make a custom index of these three constituents, you can just write it N50, right? N50. Just a moment. Yeah. And just make a space or something like that and add an IT, and then, S&P 500, so SP 500, right? So this, you can actually save it as a custom index and it will be saved into the system just like this. So here you can see it takes a bit time, but it gets saved into the system. And once it is saved, you can actually load this custom index into any mutual fund portfolio altogether, or even a mutual fund per se. So you can use this custom indices altogether just like this. Just a moment, it's getting loaded. Yeah, so you can see it is, it is being added into the system. And let's say you want to edit this custom index, right? So all you have to do is just click on this, button, which will help you to edit. So all you can do is just click on it, and you can see the constituents again, and then you can change the constituents if you want. The name cannot be changed. First of all, if you want to remove, if you want to change a name, you have to remove it and add the constituents and add that custom index again. So we have given this entire system here, that you cannot change the name once the indices has been created, right? So once it is done, you can even download the price series of this custom index. I will talk about this price series later on when we will be doing some, comparative custom indices comparisons. So there we will talk about price series. And here we have given a reset plus start where you can, reset the entire set and then start it again for, for this set of particular index. So that's how it works out. Once you cancel this up, now you can see there are a couple of indices that has already been added. Like for an example, if I talk about this particular client, I can easily see there is a huge pharma exposure here. Or you can directly check out in the equity sectors that there is a pharma exposure. So here I've already created one of the indices. I will talk about the constituents later on for this. But when you click on this, right, it will load in the performance based on the custom index. So here you can see this is, Nifty TRI, Nifty Pharma, and CCL bond, which is, being added into the system. And here you can see the relative performance with a portfolio and the index as well. And one update we already had in our system is actually, we have added the return of the benchmark beside the portfolio. So before we had just on portfolio cumulative return, CAGR, and annual return, these all parameters. But now you can also compare it with the benchmark. It's a great addition we have given here so that you can actually compare it side by side and see that accordingly, you can see we have better annual return against the benchmark and a similar set of volatility. It is not that greater, volatility than the benchmark. So it's a great way to show that that's why the Sharpe ratio is better, right? So this is how you can actually see the performance chart, and you can also do the historical VAR. So historical annual VAR, what it means is that if you want to take a look towards a downside risk for the entire set of the portfolio, right? So what you have to do is you just have to take in that there is a 5% probability that this portfolio and this benchmark can have this set of loss for a 5% probability. Now, what you can do is you can change the confidence interval. So 5% is like 100 minus 95, which gives you 5%. So if you change the confidence interval like 99, now there is a 1% chance. So for a 1% chance, our asset can lose negative 40, whereas benchmark can lose negative 35. So here you can definitely see that, we would lose more money if we invest in such a portfolio against a benchmark, against this such an hybrid benchmark. Now, talking about the constituent of this benchmark, how would you know that? To check that, all you have to do is just click on this, right? And here we have this particular set of benchmark, which is Nifty TRI, Nifty Pharma, and CCL bond. All you have to do is click on this, and you can see the constituents we have, which is closer towards the portfolio we actually currently have. Regardless of CCL bond. So we can also add in a bond fund and 10% and, make the portfolio more closer towards the, benchmark. So all I am doing here is let me add a bond fund here itself. So to add a fund, all you have to do is click on this. You can add it from here, IDFC bond fund. That's it. Moment, just a second. Yeah. Okay. So once it is added, I rescale this and I run this. So now you can, as you run this, you can see, efficiently that the performance has been, completely different. So here you can see that we actually have, a better set of performance, but our volatility has decreased way more. So now if you see the VAR, so we will talk about the VAR more into this, is that when you compare to, value at risk of an asset, which is our portfolio, and the benchmark, the historical VAR is based on the daily returns of this particular set of portfolio and the index, right? Whereas the implied VAR is based upon the standard deviation of the daily return. So the difference between these two is all on the basis of methodology. One is on the basis of daily returns, whereas other is on the basis of daily volatility. So historical volatility, you can say. So you can see this, we have already given here, the definition of what we have added here. And also you can change the confidence interval for both of them. So let's say we keep it 99. You can see we are having lesser losses right now because we are now having similar constituents, just like this particular set of an index which we have chosen. So you can change the index here, and then you can check it out against the benchmark. So that's how this works out, and you can efficiently benchmark it as per needed. And there is one important parameter which is a relative stats, which is called this one, which is very very useful if you want to gauge it against a benchmark. So for an example, if we are considering the prices of our the entire portfolio against this relative stats, you can easily see the excess return over benchmark, which is a cumulative outperformance. Then we have the annual return over benchmark, which is an alpha, the tracking error. So, how different are we against a benchmark we have chosen? So it just takes into consideration the standard difference of the standard deviation between the two, between the two assets, which is one is our portfolio and the benchmark, and then we have info ratio. So the higher and the positive the info ratio, the better it is, because we are different in the benchmark but positively different. And then we have capture ratios, which is way more useful when you want to look towards the relative performance. Now the capture ratio shows you that if it is more than 100, then we are definitely beating the benchmark when the benchmark was up. All you have to do is just click on this I button. When you click on this I button, you can see the asset performance, which is given here. So every single month when the benchmark was up, which is positive, what was our asset performance? It is given in the list till today. So you can see this is from the start date till today, and we have better outperformance. Hence our up capture ratio is more than 100. Now, what about this, right? When it is, when the down capture is more than 100, then it means that we are not beating the benchmark. Essentially, we are giving more losses than the benchmark. And here you can see in a very, very minimal marginal sense that our losses were actually greater than the benchmark. So there are cases like whenever you change a benchmark here itself, you will see the up captures and down capture being changed. Now, in this sense, when I change this hybrid, index, you can easily see that our down capture is 74, which means that when our asset had a fall, which is -30 on a monthly return set, a benchmark had a fall of -40. So yes, we are better than the benchmark when we capture it, in a down capture manner. So here you can see in the up capture as well, there is a difference. We do not have that much of a return against the benchmark. So this is a great way to check the relative performance of whatever benchmark you have chosen. Not just the custom index, but any index you choose here. So let's say if I take into consideration just Nifty TRI, and if I check that Nifty TRI with my own set of a relative parameter, you will see this particular set of data. So that's a very very useful measure you can look towards when you do the custom benchmarking. So this is one addition we have added, that we have added all the returns and the parameters of benchmark as well beside the asset, which you have to look into. It's a very great addition we have had. And the second thing is that whenever you're looking for a custom benchmark, you can easily add custom benchmark as a custom security. Now, how do you do that? What you have to do is just come into this custom section. You can click here to add and manage the custom index. And we have given an Excel downloadable function to actually add that any index, whatever index you want, as a custom security, whereas you can analyze it more. So let's say I want to, add one of them, essentially Nifty 50, Nifty mid cap, NASDAQ, and CISL. So these are the constituents what I have for this custom index, which is given here, which is 30% Nifty, 20% mid cap, 20% NASDAQ, and 30% CISL bond. So now what you can do here is you can, click on this button and an Excel gets downloaded. So let me just download it and open it. Right, and you will see the price series similar to a portfolio or similar to a fund if you download the price series. And you can see this is the custom index data for Nifty 50, Nifty mid cap, and a hybrid index which we have made. You can copy this entire thing up, right? All you need to do is copy the entire data set, whatever we have given, and paste it into the custom security tab. So custom security tab is already given here in the My Securities section. You click on it and you can paste it here itself. So now it is pasted here, and you can name it like Nifty hybrids, right? Nifty, let's say I just keep it NASDAQ hybrid, right? So I'm just naming it randomly right now. You can name it properly with the constituents as well. And once you are done with this, you validate the input, right? And you can see that this is the data set, which is a historical data set of the custom index, which was actually created through the system. And you can save it efficiently in the system. Once you are done with this, you can save another one. I will show you the process again, so that we can easily compare it in our system here into the compare tab. And why comparison? Because if you want to actually do the hybrid comparisons with certain sets of index or index funds, you can easily do that. So once it is saved, you can go into the compare section, and here in the compare securities, which we have this section for, you can select the security. So wherever we have written Nifty, Nifty hybrid, this one, Nifty NASDAQ hybrid, it's added into the system. You can easily do that. Nifty 50, now all the index, whatever we have added here into the system, that can be added, right? Now here you can actually compare all these, custom indices as per all the tabs we have given here. So let's say I want to take a look towards risk versus return for my custom indices. I can easily do that. I can easily see that, my NASDAQ hybrid and Nifty 50 is here. So it's a relative column, by the way. You can add as many, securities as you want, even as a portfolio. So let's say I'm adding one portfolio here itself, and I do the risk versus return. You can see this portfolio, this is the benchmark, and this is Nifty 50. So definitely this is all relative altogether in a sense, when you have a date, which is a start date and an end date. And you can also take a look towards this through calendar years, which gives you a yearly format overview of the index and even the portfolio. So let's consider that as well. So you can see easily that the hybrid index which we had, this is of what the underperformance it had in 2008, if hypothetically we had such an index, right? And this is a great way to analyze any such custom securities altogether into the system. So that is one thing you can easily use any index for. And yes, you can also add multiple mutual funds and portfolios to actually compare it with all the indices. So we have already given here. So let's say I want to add a fund called Mirai Asset Large Cap. So just a moment, that you can easily add that fund into the system. So you can add multiple funds, multiple index, and multiple custom securities, and even make a PowerPoint report out of it. So we already had the session on this, whereas you can make a PowerPoint report. And when I run this again and see the calendar years, you can easily see how it is looking accordingly. So let's say in 2018, our portfolio, Nikhil portfolio, which is given here, is one of the least performing portfolio or the asset here, security here in the system, right? So this is what you can do in every single comparative performance. And even one important thing, which is point to point. Now here you can actually take a look towards point to point in a sense that if there is a scenario, like for a scenario of 2020, right, you can keep it 2020 here, and you can check for on the basis of that scenario how we have performed. So this hybrid index, whatever I've added, you can easily do that, and make some certain sets of analysis which will be very, very useful for you. So this is the one particular way which you can do custom benchmarking with. And there are certain more things which you can do, which is more quantitative, which is rolling analysis. Now I'm not gonna go in depth, it's another session altogether for this. But here in a in a brief overview, what you can check is that if I want to check the which one is having the better rolling average, just if I remove the portfolio and the fund, so you can see they all are very similar altogether. So you can definitely take a call on one, because one is having better positive percentage, which is Nifty NASDAQ hybrid, which I have added, right? So this is how you can take a look towards any such index as a custom security. And then we have also added one more important update. So I would like to update everyone that now you can compare portfolios easily So, what we used to do before was to, click on this and a big box appeared here where you could compare two portfolios. Now, what we have done is we have added that compare section into the, this particular tab. So if you click on this, it actually activates that compare portfolio tab. So there are two ways to reach this tab. One is directly from, the compare. You can click on this compare button. You can click on this compare portfolios, and yes, you are getting this, particular set of box where you can add RTA clients plus the portfolios. Now, this is one important functionalities. What we used to do before was that whenever you had an RTA client, like let's say Sam Bedi, what you used to do is you used to copy this client to the portfolio section, and then you used to compare it with your own portfolio. Now you do not have to do that. All you have to do is just go to the compare, and you can directly name, start typing the name of the portfolio. So from wherever the portfolio it is onboarded, either in the portfolio section, either in the client section, you can easily onload that. For an example, let's say I have a portfolio and I want to, onload a portfolio named Ajay, right? I can just click on this and I can see one of them is coming from, portfolios tab, which is, my portfolio section. Other is from RTA clients. So these are all RTA clients which are synced with your system, right? And you can definitely name other as well. So you can see all the Sharmas, all the Sharma RTAs are given here. So let's say I want to, take a look towards Kunal Sharma. So, okay, this is only one portfolio. Let me add another one. Let's say this one. Yeah. So this portfolio, as you can see, I want to compare it with my model portfolio. Now you have to, remember your model portfolio's name as well. All you have to do is just, type in the name of the portfolio. Let's say, model portfolio. Yeah. So, you choose your own model portfolio, whichever you have. And yes, you can see there is a comparison between an RTA client and a model portfolio, which you have created from the portfolio section very easily. So you can easily do this for any particular set of clients. So let's say I'm typing a prospective client from my client section. I can easily do that and done. So I have a prospective client from a portfolio section or an RTA section, I can add it. So RTA is useful whenever you have this, all your clients synced. You can add them directly into the compare section and do all the comparative sets of analysis. And, you can check asset allocation comparison, exposure comparison, rolling returns, and drawdowns itself. So these are all easily be doable into the system. And, that is one thing. So, yes, whenever you load in, for a comparison, there are two tabs right now for a new update. One is you can compare securities here, any security if you want as a custom security, a fund, and even a SEBI category altogether. And yes, you can compare portfolios from here itself. So these are the new updates which we had from the system. And that is it for the today's session. So we will start up with, the Q&A session from everyone. So if you have any questions, you can start with your questions.
Hello.
Yes.
Yeah, I have one question. I mean, for this, adding securities in this My Securities tab, is there any workaround to add unlisted securities like some, unlisted bonds or say, for example, FDs or any such instruments wherein we do not have, the regular price data?
Hi, yeah, this is Aruna.
Yeah, hi, Aruna.
Hi. So, I mean, if you don't have price data for something, there is, at least on NGEN Markets, there won't really be any purpose because, of course, when you run the portfolio analytics, it's going to use it as something that's contributing to the price. If you just want to include it as part of the portfolio so that it shows up, then, the ideal case would be just to put, a couple of yearly dates and just put a non-moving number there, like 1 or 100 or something, which doesn't change. And it will become part of your portfolio. You can allocate some money to it. It will have no effect on returns.
Right. I mean, that's what I wanted to, like, instead of, putting the prices on a daily basis or so, is it possible, like, we can put it on a yearly basis so that at least we can have some data to, reflect on into the portfolio?
Yes, that's absolutely fine. So in this custom security section, you don't necessarily need to put in daily. data. The only requirement is should be in ascending order. So even if you put like, let's say monthly data, I think maybe we can try, where I don't know if you remember any of these, some of these will be stepped data, where you'll be able to see.
Yeah, we had one of it.
Yeah, but yeah, so if you put like monthly data points, our system will, rebase it basically. So it'll be the same. You see flat lines throughout the middle of the month until the next data point comes in, and then it'll jump. It's not going to interpolate the points between, it'll keep them flat. Okay. So you don't have to input daily data. You can even put yearly data in or quarterly data in, that's fine too.
All right, okay, got it. Thank you.
Are there any other questions?
I don't have a question on this section because I haven't used much, so I don't know really. But when I use, I will come back with questions. But this is on the other question that I asked on email on that one fund, that is Mira Asset Focused Fund, is getting reflected in a different category here. And did you get a chance to look into it on what can be done? Because the difficulty is, all the peer sections, all the peer comparisons will go haywire once it is in a different section.
Yes, sir. We actually found out, we actually checked with another data provider also. It seems that everybody is getting it as a flexi or multi-cap. I know the name even has focused in it. And we had this question before also. And now the thing is, whenever we download any kind of data, it's nowhere is it saying that it's it's in the focus fund category. I mean, technically it should be, but because that's in the name. But in terms of the category, all the data providers are basically, and that's why you see the same thing in other platforms also. So this has been
value research shows that way. If you look at Morningstar or Money Control, they
right,
show as focused fund only.
It is showing as focused.
Focused,
so we'll.
I agree with you. Rupee West also shows this as multi-cap, and then
Yes.
value research shows this as flexi-cap. Of course, all focused funds are flexi-cap. I mean, there is nothing wrong in the way they are run.
Right.
But then, construct is very different. These are high concentration bets, whereas the regular flexi-cap is a very long tail 50, 60 stocks portfolio.
Yes,
so,
yes.
And their behavior obviously is going to be different. So purely, basically we use NGEN primarily for comparison purposes and all.
Yes,
so,
yes.
Not on an absolute basis. It is more relatively versus other funds.
Yeah.
So it becomes confusing.
Yeah, we will check it again. Obviously it's very easy for us to just put a little bit of a, one-time change. So every time it, we can force it to become focused. That's fine. We just wanted to be sure before we fiddle with the data coming in, right? We could obviously very easily change it on our side, but we just wanted to be sure before we change any of the data coming from the AMC. So we'll just do one more check, sir. We'll check with the AMC fact sheet and see what the AMC itself is saying.
Right. That will be the most authentic, I guess. Yes, that's how. Yeah.
Yes.
Absolutely. Yeah. Thank you.
Thank you.
Sir, good evening. This is Ramesh Bhatt.
Hi, sir.
Appreciate all your good work and extremely good, this thing, very comfortable and user-friendly. I have some clarification on this. Under client section, if you go, it shows the AUM, consolidated AUM. If you see the latest AUM, it's showing in this case as 1 crore, 35 crore. It's showing 35 crore as AUM.
Yeah.
But in case my back office software guy, my AUM is X, and as per your NGEN RTA data, my AUM is different. That is almost 20 crores I'm getting a difference. Why, sir?
So, sir, we'll have to check on an individual basis. We do find some differences sometimes. That's a very big one. So I think we'll just check again because somebody will be in touch with you. But generally speaking, the issue is usually that one of CAMs or Carvi files are not coming through to us and
Okay,
therefore not being updated. So we will definitely follow up because 20 crores is quite a big amount for not matching. I mean, you can get a little bit of change here and there because of latest values and stuff. But
Okay.
20, that means it almost certainly that the issue is that one of either CAMs or Carvi files that for you are not getting basically.
Thank
So
you,
we
sir.
will check it. Somebody will be in touch.
Thank you very much, sir.
So, I mean, on this note again, like, let me add to this. So is there any way wherein, from our end, we can upload the RTA files as and when we require it? Rather than, of course, the auto upload system will always be there. But yes, there seems to be a lot of times wherein the RTA feeds get skipped, So is there any way wherein we can individually upload those data by, calling the data ourselves?
So there is some issue there because we would have, we can provide you a format, but you would have to do a lot of cleaning work before you upload the file. Also, the columns have to be there plus the file from CAMs and Carvi, they come in zip files, which are password protected. So the file itself is not very clean. So there's a lot of processing required. We are also changing the upload method now. So you may have seen some delays there. Are you getting files as a distributor or advisor?
No, I'm actually on and off. I'm trying to, get in touch with your backend team. And in fact, I wanted to talk to you as well.
Yeah.
This is not related to today's session. You see, my system isn't yet, uploaded with all the data. The reason being, my files, belong to that RIA code, and I don't think your system is still, up with all those, function. I mean, the fields and all into your system wherein it can support the RIA code files in the direct plans.
Yes, sir. So there I can give you an update. We've actually checked. I think someone from the team sent it to me, and we've checked it. The Carvi file is definitely good to go. So I think we should be able to do that quickly. The CAMS file, we'll have to check what kind of CAMS file you get. The thing is, if it is very similar or almost exactly the file that comes for distributors, then basically there should be no problem. We need a little bit of tweaks here and there, and we'll be able to update
so
it.
I have already, spoken to your guy, like, which file you need to import.
Okay,
for the RIA codes. Hopefully your system should support those fields,
It will, sir. It's very clear. What we need is a client name, PAN number, and after that we need the the office.
Absolutely, those fields are already there, and I have been importing all those files, for some other portal that I'm using.
Yeah.
So I think with the same files, you should be also able to process it into your portal with those data.
So then, in that case, we should be able to do. So we're basically trying to optimize this so that it updates almost. I mean, CAMS already updates for almost everybody now on a daily basis automatically. And for the Carvi files, it's we upload them once a week, and we're trying to streamline that process as well. So I think I'm sure that we'll be able to solve the RIA problem very, very soon.
Correct. I mean, I have spoken to your, backend guy. I told them, like, you just have to take the box, into their what you call this mailback data where you call for the data. Is you need to check that RIA box over there when you're ordering the files.
Yes, correct. That's right. That's right.
Okay.
Yes.
All right. Okay. So any timeline, Arunabh, I mean, till when can this be resolved for me, for the RIAs? Like
so, realistically speaking, I hope to have some, something for you to check, before the end of this month. Maybe we can, if you don't mind, so we can test on your login.
Sure.
Okay, right. So perfect. So somebody, so either Shahrukh or somebody from our team.
Yeah, Shahrukh is in touch with me.
Yeah, perfect.
Okay. All right. Thank you, Arunabh.
Sir, I have one question, sir.
Yes.
Sir, is it possible to download a prospect portfolio in our software and then to compare the model with model portfolios? Sir?
Yes, absolutely. All you have to do is create a new portfolio. For the prospect, you can enter the individual holdings of your prospect either one by one. You can or using any of the other upload functions that we have. Once you've done that, you just give it a name and save it. Just after you create the portfolio, it will be saved with the name. Once that is done, all you have to do is you can head over to the compare section, and I'm assuming that you would have some kind of model portfolio already saved in the portfolio section. So here you can just search for that prospect portfolio. I think maybe we'll have to refresh, but you can see here on the left hand side, you'll basically you'll basically load up the one of the portfolio. So there it is, prospect, and then we'll fix that, by the way. If you create a new portfolio, we'll make sure it automatically changes. And you can put the model portfolio on the right hand side. And in this way, you can compare both portfolios. And you can go through these different tabs. There's download functions for a PDF here as well. You can take screenshots or just download the portfolio NAV also.
So you could download a prospect portfolio by manual or automatic, sir, from.
So we have both options. Manually, you can easily put in here. Just you'll have to put the percentage values. So you can add the fund one by one. That's one way. The other way is you can check out the upload options here. So if you have the portfolio as their portfolio in CDSL file and the summary file which has the holdings, or the NSDL files, or the CAM summary PDF, this one loads quite well actually if you have the CAM summary PDF. Please make sure it's the summary one, not the detailed one. So they'll automatically load it. And then after that you can just save the book. Is that okay?
Okay, sir. For downloading prospect portfolio, just we have to enter their PAN number, or what are the requirements to download the statements, sir?
Oh, so that you will have to do on the CAM site. You can get the CAM summary file. It kind of looks like this. There's a screenshot here. This one. So that's an example file. So your file will also look like this. And it will come to your email, so you have to download it, and it will be password protected. So when you click on this box, it will ask you, to first enter the password and then upload that file. So we'll open the file using the password you've given, and that's it basically. It will read everything and show you what's in. Then it'll automatically add it. And if that's a problem, like I said, if it's not too many funds, you can easily just do it manually.
Manually, I can do it, sir, but automatically only that I have no idea to download.
Yeah, so the manual option is there, but the cash summary PDF, ma'am, is very easily available actually. Online you can go to the CAM site. Maybe we can find the link, but to find it here, I don't know. It's a bit confusing, but there's a place where you can just order your CAM summary for any PAN number if you have the right email address. That file is sent to only the registered email address of your client. They will have to send it to you, and then you will have to put it in. It will not come to your email address. It will come to their registered email address.
Okay. If I give if I select that option, that statement goes to investor.
Yeah, not from here. Not from here. You'll have to first order the CAMS file from the CAMS website. Okay. Once you have the file, then you can upload it in our system.
Okay.
It can be done by MF Central also, or through Carvi also, KFinCart, or
okay.
CAMS Edge 360. So all the three will generate that.
Okay, sir.
The only thing is it goes to the investor, so we will have to keep from him.
Yes.
Arnab sir, this is Ramesh Bhatt again.
Hello, sir.
Sir, is there any chance that we can have one physical session at our cost? in Chennai so that people can cross from Tamil Nadu can travel, because there is when we sit with the system directly, because example, see, I'm seeing this on the screen.
Yes,
When
sir.
I do it myself with the system, we can have it even a single day from morning 10 to 6 or something like that on a Saturday or something. That will be really great. You can put a mail, people in Tamil Nadu, how many are interested. So if
Yes.
15 or more people are interested, we can set a cost for that and we can do it, sir.
Yes, sir. Absolutely, sir. Dave and I, we can be in touch with you. We can set something like that up. That's no
Because
problem.
when we do it on the system directly and when you are present, something, it will be great. We will understand many things, and what all the doubts we have can be lively sorted out too.
Perfect, sir. Perfect. So we will get in touch with you and we can plan something like that. No problem.
Great, sir. Thank you, sir.
Thank you. Thank you, sir.
One more doubt, sir.
Yes. Yeah. Please go ahead.
In compare section, there is an year-wise data that is in calendar years.
Yes.
You have to give the return of Jan to December or any other dates.
Okay, so those are just calendar years. So they will always be, 1st January to 31st December, inclusive of both ends. And so these are these are fixed years. But if you want to do kind of annual performance analysis, my suggestion is that you use the rolling tab, because that gives you every single 1 year period, which is a much more complete analysis. Like, for example, here you can see, for example, L&T Mid Cap Fund, 72% of that 260-day return is positive, right? Which is, it could be worrisome for you, or it could be a good thing. That depends how you want to look at it. But, that means, 72% of them are positive. You can see the average yearly return is 14%. And I'm saying yearly because I'm assuming that 260 working days is representing 1 year. So here you can see 14.58, that's the average year. And on the right hand side, you can actually see the evolution of, sometimes you have really bad 260-day periods, sometimes you have very good ones. And on average, that's what you get. So if you want to look at very different periods, that's one way. And the other thing is, if you're interested in a specific period of time only, you can always go to point, where you can actually just input the dates here. Yeah. Like that. Do we have any more questions?
In this rolling return session, sir, we have to see the average return or the positive percentage return, sir. Which one is better?
Well, both are very useful. Obviously, average return is to set the expectations of someone. Basically, to say that this is the expected 1 year return for this fund. The positive percentage, you should look at it from the perspective of risk, basically, because here you're saying there's let's say 78%. So there's over, for example, Kotak Emerging Equity Fund, 78% are positive. That also means over 20%, a negative. So when we look back in the past, almost 20% of your 1 year periods have actually been less than zero. So that could be a worrisome thing. So it's from a perspective of risk, you should look at that column. The average column obviously helps you understand the kind of expectation you can have in terms of return for an investment for 1 year. Basically.
Thank you.
So there is a question by Mr. Nikhil. I have written it on the chat.
Okay.
It was a direct question, which said, please, can you add 52-week high price as well when we download stock portfolios along with CMP, especially when we download portfolios from the client section?
Okay. 52-week high. So we can add it to the list, and yeah, we can have a look at it.
Okay. And there was another question. Please explain difference between light and premium. Ajay sir, we will be in touch with you for this. So one of our team member will give you the call.
So suggested period for rolling analysis, Mr. Karthik Dadi is asking, again, so this is more opinion based rather than, there is obviously no right answer to this. We typically tend to use 260 by default because, that's a standard number, 1 year. But I would say that will really depend on the client that you're talking with, because if they have a really long investment horizon, if they're putting money away for 5-10 years, then they shouldn't be that bothered about 1 year rolling or 260-day rolling, because it doesn't matter. Then they should be looking at larger numbers. If somebody is putting money in for 1 or 2 years and 2 years later they're going to need that money back, then you really have to look at smaller periods like 1 year or 2 years. And just make sure that the risk is covered. For example, here, with a 2-year window, you can see some of these funds, there's a 20% chance of being below zero. That's not a very good thing, especially if somebody is expecting some return. So it's very likely that they, put in X amount and they still got the same thing back 2 years later. They would have got more in FD, etc. So, so now suddenly, that can cause problems. So I think the period of rolling analysis really depends on what you're doing analysis for. So period you meant start and end date. So here I think the more the better. There is really no case where less data is more useful than more data. So the further back you can go, the better it is. And you will see as you go back, some of these things will become dash because they didn't exist back so far. My suggestion would be you take as much data as this is possible. Obviously, you can't go 10, 15, 20 years. If you go that long, half the funds will not be there. But you should do as much data as possible. The more data you have, the more analysis you have. Now you can see here what happens is 4 funds are just out of the analysis now. So that's not very useful. So you should probably come a little bit more recent, maybe 10, 12 or something. And then you get a little bit more data, so you can make a better analysis. But data, sir, I would say the more the better. Yeah, sir, 7 years sounds enough, to be honest. I mean, it's a long enough period. Especially with COVID, I would say that 3 or 4 years not a good period, because it's certainly not representative of normality. So it should probably be at least 6-7 years.
On this sheet that you are showing, this, I mean, this is always in our mind, this question.
Yes.
The 2 options that you give, point-to-point returns and simple returns.
Yes, sir. So here,
which one to use is always a.
So this is, I would say, you should stick to simple returns because simple returns does not affect what you see based on different periods of time. Point-to-point. The clear difference here is point-to-point is calculated by using the NAV today, dividing it by the NAV in the start time, -1. Now,
Yeah, but
as
then the very definition of rolling will get lost there.
yeah, so here, so ideally speaking, the annualized and simple is what I would suggest, because it's the most standard way of looking at things. Point to point we've added because for some users they wanted to see this. So ideal case is what we'll do is we'll make this the default also, but I would suggest
actually, right.
Yeah, we'll make that the default because annualized and simple, because that way you're just looking at it in a straightforward way. Point to point can be very subjective because during down markets, when it comes back up, the returns will be huge. When it has a lot of path dependency on it, which you don't want to deal with. So simple returns and annualized is what I would say.
Yeah. Okay.
Yeah, we said absolute and simple. So annualized versus absolute, I leave that decision to you because the difference is very clear. We all know what the difference is. If you want to look at a 2-year period as 2-year return, then fine, you can use absolute. I was only suggesting annualized in the sense that what if you want to compare 520 rolling returns with 260 rolling returns, then you should obviously analyze. But analyzed absolute is a clear difference. With simple returns and point to point, I would suggest simple. Do we have any other questions?
No, I think I'm fine. Yeah.
Perfect. Okay, if there is nothing else, where I think we can close up.
Sure. So thank you so much, everyone. And for attending this session. We would be having the next session possibly next week, same time, same date altogether. And if you have any queries, please let us know. We already have a support mail. I'm writing the support mail here itself so that we could address your difficulties directly from here. So this is in the chat box. And thank you, everyone. Have a nice weekend, and we will catch up again in the next week.